Are live. Welcome everybody. Hope you guys are all having a fantastic day today. We are going to be talking about and looking at some earnings. We've had some companies come out today after hours reporting earnings. So we're going to be talking about what's going on, answering all those main questions that everybody has of what's going on. Should you buy this stock? So guys, I hope you guys all enjoy it. If you have any questions, feel free to ask in the chat room. And I'm super excited for this video here. I just want to make sure we are good to go because for some reason it does look like we are having a little issue here. So hold on. Let's make sure we are good to rock and roll, or maybe, okay, we're up, ready, moving and grooving. That's what I like to see. So we got some earnings reports that have been released today. Now, for those of you that don't know what an earnings report is, so an earnings is when the companies come out and they give you all the details of what's going on with the stock. So I hope you guys all enjoy it. And, if you guys are new, I know I'm kind of all over the map right now, but if you guys are new, my name is Carter. I'm a full-time trader and investor. We do have a school where you guys can use code MONEY for 50% off. Talk about how to find undervalued stocks, my strategies, my mindset. So guys, let's jump into this here. So I'm super excited for this one here. So, all right. So the first company that released an earnings is Tesla. So Tesla here, I think we all know what Tesla is. Tesla electric vehicle manufacturer. Now, what they've done here is they've actually had a decent earnings report, I would say. So Tesla reported Q2 earnings of 0.52 cents a share on revenue of 25.5 billion Tuesday afternoon. Analysts from Fact set Tesla earnings to be okay. So here's everything right here. So the non-GAAP EPS here is actual, 52 cents, estimated here at 58 cents. So this is really one of the only things they missed on. The revenue, they beat expectations. They were expected to bring in about $25.5 billion. Now, they brought in about 24.1 billion, or oh my gosh, I can't even talk. They were expected to bring in 25.5 billion, but they brought in 25.5. Geez, I can't even talk. They were expected to bring in $24.1 billion. The automotive revenue came in at 19.8 when they were expected to bring in 19.7. Energy generation and storage revenue about 3 billion, expected 2. That's a huge beat. That's like $1 billion beat there. Services and other revenue here brought in 2.6 billion, expected 2.45. Gross margin increased. Guys, that's awesome. Gross margin is up. So Tesla doing relatively decent, I would say, Now, what did this stock do today? So this stock today, it doesn't look like the market's reacting very well to it. You guys can see that ever since the earnings, it pretty much stair-stepped its way down. So for me, I never hold through an earnings report. I find it very risky. Now, the reason why is because of this. When a company releases a bad earnings, the stock gets crushed. So if you are a new trader, new investor, don't hold during earnings. It'll save you guys some money. But guys, so Tesla here, that's why we're getting sell-off, is honestly just because of the quarterly report here. So let's see what else we got going on here. So we did have a couple of other companies that did release earnings today. I do want to show you guys, and we'll talk about them here. So we had Google, we had Tesla, we had Visa, Coca-Cola released it earlier. Texas Instruments, and a couple of other ones here that are huge companies, Lockheed Martin. So, those are all the other day. But let's talk about some of the positions here today. One of the companies here, let's go to it. Where are we at? News is gonna be Google. So Google here, what they did is their non-GAAP EPS, earnings per share, they actually beat. So this was a little better than Tesla's here. Now, they were expected to bring in $1.85. They brought in $1.89, which is always really good here. Now, one of the things here is the total revenue. They beat expectations. They brought in $84.7 billion, expected to bring in about $84.3 billion. Google advertising, they beat revenue here. They beat Google Cloud, which I know has been a struggle in the past, is their Google Cloud. So it does look like they're beating expectations on that, which is always good. Google subscriptions, platforms, and devices. This is where they missed, and on other bets here. I did also see that Google, let me see if I can pull it up here. Google did miss on, let's see if we can find it, on, I believe it was YouTube revenue here. Yeah, right here. Let's go back to this here. Okay. So Alphabet meets earnings expectations but misses on YouTube ad revenue. So Google's parent company Alphabet reporting earnings after the bell. Alphabet's revenue is up 14% year over year, driven by search as well as cloud, which surpassed $10 billion in quarterly revenue and $1 billion in operating profit for the first time. So this is a huge thing, right? This is a really, really good thing. Like I was saying, they did have struggles in the past with Google Cloud, so it does look like they're doing things right here. The company reported ad revenue of $64.6 billion, up from $58.1 billion last year, showing that Google's advertising business continues to grow after rising inflation and interest rates tighten marketing budgets in 2022 and 2023 here. Let's see what else they had. So this does break it down a little better. So their total earnings here, they're brought in $1.89, like I said. The total revenue beat expectation. So Google advertising revenue here brought in $8.6 billion versus $8.93 billion according to Street account. So that's not a good thing, especially for I'm a YouTuber. But one of the things here with investing in general, you're gonna have different market cycles. So kind of like it was saying a little earlier, that they just right now, what we're seeing is a lot of marketing companies, a lot of marketers. If that's just say you're Coca-Cola, and you're that normally marketing budget, let's just say is $5 million. Given high inflation, high interest rates, now a company could want to tighten down on their marketing. So that this kind of causes a little bit of a slowdown on a variety of things like that. So, so. Should you buy Google? That's everyone's main question. For me, of course, right? Google is not going anywhere. Google is one of the largest companies in the entire world. And one of the things I love about them, let's make sure I didn't just unplug that. One of the things that I love about them here is this. Google's cash on hand. So Alphabet had $108 billion in cash and cash equivalents. So what this means is, if Google ever goes through a hard time, they have enough cash to continue to invest and grow the business. And honestly, you can see the market's taking that they've missed on their YouTube revenue. They're taking it relatively decent. Today, after hours, it's up 1.3% right now. So you guys can see a little volatility with it, but still overall growth, which is always good here. So yeah, that's one of the companies I did want to talk about. And if you guys have any questions, feel free to ask. If you guys want to learn more about investing, trading, check out our school, code money, 50% off. I'm just plugging that real quick. But another earnings here is going to be, let's see if we can find it here. Another earnings is going to be Visa here. So ticker symbol V. Now, Visa here is one of the companies that I love. And you guys can see it doesn't, just by looking at it, it doesn't look very, very good. But one of the reasons I love Visa is because of their profit margin. And the last time I looked at it, let's see if we can find it. It's absolutely bonkers here. So their profit margin, or their net margin and gross margin here, is 53%, which is incredible. And it does look like we actually got a little bit of a slowdown on that. So my expectations is that's why we're getting some sell-off here. So let's go to the news and see what we got. So all right, right here. All right, so Visa posts Q3 revenue, payments volume growth. So let's see here. So Visa said revenue rose further in its fiscal third quarter as it continues to see higher payments across broader volumes. The credit card company on Tuesday reported a net profit of $4.9 billion. So this is net profit, or $2.40 a share, compared to 4.2 billion or $2 a share. So they did beat some expectations here, which is always, or no, this is from a year earlier. So they are growing, stripping out one time. Okay, right here. This is where we care about. All right. So revenue climbed 10% to 8.9 billion, missing. So they missed, missing 8.92 billion expected by Wall Street. Visa said payment volume rose 7%, with cross-border volume 14% and processing transactions increasing 10%. So this, that's all good, increasing all that stuff. But this is why we're getting so much sell-off, is because of this, right? We did have a revenue increase for Visa, but overall they still missed on their total revenue. They were expected to bring in 8.92, brought in 8.9. This is, people think that this isn't that big of a deal, but if you hold that, just say $50,000 or even more, right? That's actually a small amount of money if you compare it to like hedge funds. If you're a hedge fund and you invested $10 million and they released this report that it's not looking good, we saw a decrease in what Wall Street expected, you're selling. A lot of hedge funds don't even mess around with this. They'll just sell and not even worry about it. But I do think that Visa in general it's not going anywhere. It's a huge company, great profit margins. I'm not sure what their cash on hand is. I'm sure it's crazy. Let me see here. I'm sure it's crazy. Visa cash on hand. So Visa's cash on hand is 17 billion, or actually it used to be in March. So it's $19.2 billion in cash, which is an increase of about 6% from a previous year. So that's so much money, and Visa's not going anywhere. It's a huge thing. It's a huge thing for the stock and like growth. If we ever go through a recession or a hard time or anything like that, that's always good. But another company that did release an earnings today is going to be Coca-Cola, KO. Now, looking at it, Coca-Cola is it's a different breed of a stock. And the reason why I say that is it's been around for a while, and you guys can see there is so many shares out there. There's over 3 billion shares afloat, which is quite a lot. So it's really hard for this stock to get moving and grooving. But, looking here, let's pull it up. Coca-Cola's Q2 comparable earnings revenue increase. So got a revenue increase. The revenue for the quarter ending in June 28th was $12.36 billion, compared with a previous year of $11.97. Analysts surveyed by Capital IQ expected $11.75 billion. So boom, beat expectations on revenue. Coca-Cola, like I said, it's a huge company. It moves sluggish just because there's so many shares out there. You need a ton of people to buy it to make it interesting for a lot of investors. But still, that's always good. Coca-Cola is in so many dividend ETFs, so many ETFs in general. And yeah, it's a good little play there. But, let's see what else we had. I know we had a couple others. So we got Texas Instruments here. They released it, Coca-Cola hasn't released it yet. What is this talking about? 724. You guys can see, I'm jumping the gun here. It looks like our last report date. Or no. What am I doing? Okay, yeah, we're good. But yeah, Coca-Cola, I'm all over the map today, guys. So cut me some slack. It's been one of those days. We got Texas Instruments here. Let's see what's going on with them. So you guys can see Texas Instruments here. Looks like some good growth after hours. Finally, maybe something good. Texas Instruments Q2 earnings revenue fall. Jeez. 23 or Q3 guidance set. Texas Instruments reported Q2 earnings late Tuesday of $1.22 per diluted share, down from $1.87 a year earlier. Analysts pooled by Capital IQ. Okay, so they're still doing good. They still beat expectations. Revenue in the quarter ending in June 30th fell to $3.82 billion from $4.53 billion a year earlier. So analysts surveyed by Capital IQ expected $3.882 billion. Okay, so they pretty much were just right on track with their revenue here. Let's see. Yeah. All right. The company expects Q3 EPS of $1.24 to $1.48 on revenue of $3.94 billion to $4.26 billion. Analysts in Capital IQ pooled EPS of $1.37 and revenue fell, or in a revenue of $4.12 billion. So shares after hours rose 4.2%. So yeah, I mean, doing relatively good here. You guys can see. What else do we got? What else? And if you guys are new, make sure you guys like, subscribe. You know, this is one of the first times we've actually done like an earnings pool where we just talk about companies that are, you know, releasing earnings, and it's kind of fun. You know, we had, let's see here. Looks like we possibly had Lockheed Martin. Let's see what's going on with them. LMT here. LMT. All right. Okay. All right. Let's see. I can already tell what has happened today, and it does look like. Let's see. I think they released it earlier, from what I understand, earlier today, but still. All right. LMT earnings. Lockheed Martin gains on raised 2024 forecast. All right. So shares of Lockheed Martin climbed about 5.63% after the company gave its pretty much its forecast a boost. Now the aerospace and defense heavyweight expects to pull between $70.5 billion and $71.5 for the year, up to its earlier range of 68.5. Ooh, that's so pretty much they came out and said, hey, I know we said we were expected to bring in about 68.5 to 70. Expect it to be a little higher, to 70 to 71.5. So that's always a huge thing for the companies to come out and say. The company has projected in a range compared. Let's see if we can see. Okay, revenue breakdown. Let's see if we can find a different site. I don't want to log in and then have you guys know all my stuff. Let's see. Let's just see if we can go here. All right, so EPS rose 3%. Revenue here. Revenue rose 8.56%, which is good. Income here. So obviously beating expectations, especially with the company coming out and saying, hey, we're probably going to do better than expected. That's going to cause a huge amount of people to buy this thing, and that's exactly what we got. Now, should you buy it? All these stocks here are growth stocks, right? So they're going to be volatile, they're going to be risky, they're going to go up and down, you know, but if you play the long game with most of them, you're going to be just fine. I'm a huge believer in positions that you hold through earnings is positions you got to hold for a while. So, you know, you got to have that mindset of whether it goes up, down, consolidates, you're in on it, you know, and let it ride. And we did also get Spotify's earnings earlier today. I'm sure you guys watched my video on it. Spotify up 11%. Huge boost for the company. Looking at like the minute chart, you guys can see just how rapid this thing went up. Now they pretty much beat expectations, doing things very well. You guys can see growing on everything. Company pretty much said that they're different than most subscription companies because they have a broad range of products. And it kind of does make sense because if you look at, like, let's just say YouTube Music as an example, YouTube Music has two tiers. They have a free tier with ads, and then they have, the premium one, which is like same price roughly. But they have a variety of different packages and tiers and stuff like that, which has caused it where whether you're somebody that wants to spend $0 or be more expensive on the premium side, there's just a little more options for you, which is going to be a broader range of audience, which is going to be more revenue here. So that's a cool little thing. We also had UPS, I believe, get absolutely crushed today on earnings. We've just seen this huge earnings pool, right? Missing expectations and stuff like that. So I do think in the grand scheme, UPS is looking at a lot of sell-off here just in general, right? You guys can see it's just been stair-stepping its way down. So we could see actually a little buying pressure. I know it sounds crazy, but just basic technical analysis on this, we could see a little move, possibly. But yeah, that's everything going on, guys, with some of the major companies here. If you guys are new, like, subscribe, but we'll end it here. I just wanted to jump in, hang out with you guys for a little bit. I know it's fun doing it, and I have a good time with it. So we'll see you guys in the next one. I hope you guys all have a great rest of your day. Like, subscribe, and we'll see you guys in the next one.